Hey all, welcome to Forex Billionaire. This is Raghu here. After my first video on Campbell pivots and 20 SMA Forex strategies, I'm bringing you a new educational video here. And we are a new YouTube channel. And if you are watching this first, uh, no need to subscribe yet. Follow us, test us. Then if you feel happy, you can subscribe us. Now, what do we believe in? We believe in simplicity. Whatever strategy we are using to buy and sell, it should be simple yet effective. Now, today, the strategy which I'm going to bring is nothing new. Most of you people are already aware of it. Now, it's a no nonsense strategy, but a very simple one. Now, before deep diving in, I just need to tell you that hope you guys are aware that trading is a probability. Probability means every trade has an equal opportunity to fail as well as win. Now, how do you increase the odds of winning determines your success as a trader. You rush, you bust yourself. You wait too long, good, your capital is still with you, but at least you're learning something. You may miss opportunities. Now, no need to rush. Trading is one of the most dynamic career out there. So I feel happy to join a trading community and try to help you guys in whatever way possible. Now, today I'm going to bring you a very simple strategy based on 20-day simple period moving average and 5 exponential moving average. Now, what is this 20-day simple moving average? Now, you might be aware. So most of you watch a lot of YouTube videos, read a lot of books. Now, you know 20-day simple moving average for why do we need to use it? It's a lagging indicator, right? Everybody knows it's a lagging indicator. But if you have little common sense, you will understand why all the indicators works, why all the strategies work. It is because at any given point of time, the collective decisions made by sellers or buyers is what makes any strategy to work. It's not because there is an indicator. Please understand, I repeat again, it is the collective decisions of the buyers or sellers who are making a decision at any given point of time is why the price moves. It might be institutional traders, it might be a retail trader, it might be anyone. So don't get into these kind of concepts of institutional traders or small traders. Market is buyers and sellers. Now if you keep the strategy simple, you will understand why it works. Now 20-day simple moving average has been used before I was born, and several of traders use this. That's the reason it works. Now you already know what is 20-day simple moving average. I'm not going to get into it. Now, why 5 exponential moving average? 5 period exponential moving average is a momentum indicator. Predominantly it captures the momentum, and you always have a trade where you can make 1:1 or 1:2 with very minimal stop loss. That is the reason why I'm teaching you. Now, these are not tailor or hand picked charts. I am going to go from present day to previous day. Currently I'm showing you USD Japan, right, currency. Now this is yesterday. So yesterday what happens is third, okay, we have a range since morning. It is a tight range. Now, when you have a tight range and you know that the moving average is flat, that means there is no trade. Market is sideways. It's not rocket science. But what I'm interested here is once you define the high and low of the range, I want you to closely watch whichever side the range is getting broken. I want you to enter the trade. Now here the assumption is about 20 period simple moving average. Uh, it is a buy. Below 20 period simple moving average, it is a sell. Fair enough. You need not use any other indicators on the chart, and all you need to use the time frame is 15 minutes time frame. I don't want you to get into multi time frame concepts yet, but use this 15 period time frame, do back testing and start trading from Monday. And if you incur any loss or if the strategy does not work after testing it thoroughly, just share your comment. right? You can criticize me that I shared a shitty strategy, but I'm going to tell you that this will work 100%, right? Now, this is a simple range. Everybody know this is a range. I'm not going to get into any price action. I'm going to show you a very effective price action, which is shared by Frank Ochoa in A Secret of Pivot Bots and how to effectively implement them in the upcoming videos. But for now, understand this is a simple range where the moving averages are overlapping near the range breakout. The 5 EMA is showing the momentum and it breaks out. You're going to enter here. Now, ideally, when you enter here, what should be a stop loss? The stop loss is I want the previous swing low. If it is very close, a previous, I mean, this is the previous swing low before 20 SMA, which I would like to keep it as a stop loss. The logic behind is we want to follow momentum trades. If the momentum is working and then the probability is with our favor, probability is favoring us, then we are going to make 1:2. If the momentum fails, I want very less stop loss. So previous swing, now here I see this is a test of the previous swing. So since both are very close, I'm keeping this as my stop loss. Fair enough. You can just go and verify. You'll have 1:2 trade here. We'll go back. Then this is the 2nd June. Now again here, we are stuck in a range. Guys, we are stuck in a range. Now we don't know what to do. And I have told you that trading is a waiting game. People who rush, you get busted. You have patience, you enjoy the game of boring patience, and where are the buyers and sellers pain point area? The pain pointer is nothing but the stop loss. When they hit the stop loss, either they exit their positions, and some of them may take the positions counter trade, which increases the momentum. These are the price action you need to understand. That is for some other video, future video. But for now, keep it very basic. Even if you don't know anything, you can understand this as a range, right? Now 20 SMA is the blue line and the purple is the 5 EMA. I'm going to make it bigger. Now here the market is breaking out of the range, trying to break out. Now, what is the previous swing? These are the previous swing. I have some kind of price action. Market tries to break here. It comes, tests, and go. We are going down, right? Now, this is the range. This is the double bottom. Now, this range is getting broken. My stop loss is here. I'm going to go ahead and book the trade. I'm not going to show, replay and play it because that's not my style. We will use it for some other time. But right now, I want you to understand the concept so that you are understanding it. 20 SMA, above 20 SMA buy, above 5 EMA will be your entry. The previous swing low or swing high before below the 20 SMA that before the breakout happened, that will be your stop loss. Now this is the range. Market comes. This is the range. Near the range, yes, price is testing. It is upper. I mean, it's in the uptrend. Now the momentum is increasing with this big candle. Now, after this big candle, you can enter at the high of this candle, close of this candle. What will be a stop loss? Now, ideally, people might tell me, okay, I can keep this is the previous swing low. Whenever the two swings are very close, I would prefer to keep the longer one. Even if it is little bigger stop loss, I want to keep it so that if this candle comes and not hit the stop loss, the first stop loss, so I need to have a little cushion. That's the reason I'm telling you. Now stop loss comes first in any trading. If you're not putting the stop loss, you're going to get busted. Now I'm not interested in any of this trade. I want the price to come very closer to the 20-day simple moving average, and then I want the 5 period simple moving average to deviate. I haven't seen any of the videos, but I do know some of the professional traders use a 20-day simple moving average. And if the strategy is already out there, I mean, feel free to use it as a refreshing. But this is what I generally use. But this is where, okay, other range bound market is breaking out. You had see this is from June 1st, 2nd, 3rd, and May 31st. Watch here, long range, long range. I'm just waiting which side market is going to break upside or downside. Whichever side it is breaking, I'm using the stop loss below the previous swing and then going with the trade, right? Even here, this is what I wanted to tell you. Okay, we have one trend here. This was the trend. I'm sorry, this is the range. In this range, market tries to break out. After breaking out, it immediately comes back, takes a stop loss. So we don't have 1:1 here, right? We don't have 1:1. We may have 1:0.5 or something. So stop loss is a part and parcel of trading business. So you have to accept it with the pinch of salt. But look at the brighter side. Again, market gets into a range and then you have a breakout outside the range where you can enter your trade. If you're entering your trade here, this will be your stop loss. Yes, again, market went into the range, but it is above your stop loss and above 20-day simple moving average. So you're going to ride the wave with 5 exponential moving average. This is the momentum. As long as the price is hugging the 5-period exponential moving average, you need to be confident. You should feel confident that price is going to go upside, right? Another one, this is from 27th May. So every day you have these ranges. See, I'm not worried about this here. Now you can consider this as a big range, but the candles are pretty big. So here I want a medium size candle breaking out of the range, something like this with this wick reversal price action below 20, then go. Now this one you can trade. It's a high probability because every trade is a probability. Your stop loss will be there, but this particular strategy focuses only on the range breakout, because in Forex trading, time and again, whatever currency you guys are trading, it will be in range and then the expansion happens. Contraction, expansion, contraction, expansion. Even if you use pivots or candela pivots or floor pivots or any other indicators, so they are so wide, and the time frame with whatever time frame you're using, 5 2 3 15 30 minutes, 1 hour, sometimes it will be very confusing. Hence, most of the people either love to use naked charts or with simple moving averages so that their focus is on the right side. Now here, the focus means we are not going against the 20-day simple moving average. We want to go with the 20-day simple moving average. Hence, this strategy is very, very effective. You can see, I'm not going to preach anything. You can see. So since 24th May, you have numerous trades, and if you all stick to this, you have a probability of winning. Now quickly we can go to GBP USD. Now this is again yesterday, very, very long range, right? Long range. 20 SMA is flat. Uh, 5 EMA is going up and down, so there's no trade. So patiently we will wait. We are going to wait for how many hours? Okay, how many hours? Almost after 5 hours. After 5 hours, it is giving you a break. Now here, I know most of you love to use mechanical trading systems. Unfortunately, the algorithm or mechanical trading systems, you have to do a back testing and use it at your own risk. But I am little old orthodox, old style. So I would love to wait and take the trade so that I know what I'm doing, so that I have the control. I don't mind taking high risk whenever the range is happening, so that my money management and the lot sizes are managed appropriately. See here, another range. This is the stop loss range breakout. Yes, it is happening here, range breakout. Now, if you know price action, you may think, yeah, this is outside reversal kind of candle. This is an inside bar. This is a very strong inside bar. After a big green candle, you have an inside bar, which secret of pivot boss Frank Ochoa calls as extreme reversal, right? Market snaps back to the previous range. So these price actions, if I start explaining you, it will be very confusing. But right now, stick to the simplicity of the strategy, which everybody can follow, and most of you know, but you're not at implementing. Just you can try implementing it. The real success is in following only one method. Keep reinventing yourself rather than reinventing the wheel every time, right? So this is, so everybody knows range bound, and a range breakout is a high probability. So it is based on that kind of price action. Watch here. This is a single day on 31st May, first range. You can call this also as a range. Range breaks out. You can enter here, another range. This range breaks out. comes back and hits your stop loss here. Suppose if you're taking a trade here, suppose if you're taking a trade in this range, still your stop loss is hit. Now those are the days, I mean these are the days where you have to understand that yeah, every trade is a risk, probability was against you, odds were against you, so you lost. But from the practice point of view, strategy point of view, you took the right trade. Unfortunately it did not work out. It's as simple as that. If you had one-on-one, you should book it. If you don't have, you can take the stop loss. So I'm also showing you where it has hit the stop loss. This is another day, a small range gets broken. This is a big red candle. I don't want you to watch anything. So there is a big red candle, there's a big green candle. This is a footprint of big institutional traders. No, everywhere you see candles, everywhere you see footprints of institutional traders. So the more you deeper you go, the more confused you get. So keep your strategy simple and go with the probability. Probability means every trade is a risk. Either you win or either you lose, right? So when you understand this way, the range breakout has the higher probability of making money, which everybody knows. So you go with that, go with this simple strategy, and in due course of time, you will be able to manage it. So here, this was one other stop loss hit where I have mentioned. If you have entered here, your stop loss gets hit here. So that is okay, fair enough. After market going up and down, it develops a small range, right? Where the range is getting broken. It is above 20 already. So you see another inside bar, reversal wicks, everything taking support on 20 SMA. But our strategy focuses on a range. The range gets broken, take the trade. Keep it simple. I don't want you to read any other price action candles like outside reversal, morning star, evening star, inside bar, engulfing. No, three white soldiers, three black crows, piercing pattern, dark shadow. Forget everything. I want to keep you focused only on the simplicity of the strategy. Hope the strategy, the main requirement is market in a long range. And in the range, when 5 EMA starts diverging out of 20 simple moving average on 15 minutes time frame, that will be your entry with the stop loss behind above the previous range high or range low. So the price action behind this is we are trying to capture the momentum of 5 EMA, and as majority of traders use 5 EMA, so I am using 5 EMA. Some people might use 8 MA or 8 EMA. Some people want to use 3 EMA. I don't care. I don't care. Like every strategy might work. Now here 5 EMA, 5 period exponential moving average is what I'm using. And I have seen personally in my trading experience, several traders across the world use 5 period exponential moving averages in stocks in various time frames, options, futures, currency, and even in cryptos. So Forex, crypto, everything they are using it. So that's a reason why they work the way they are working. So probably you should try it out too. And you can try it out immediately whenever you get the next opportunity. You need not wait for anything. Sometimes you might be used to adding a volume bars here. I'm not using any volume bar because I want 5 MA, 5 EMA, 5 period exponential moving average is a momentum capturing a moving average, the faster moving average. So if there is a momentum, price will obviously move high. If there is no momentum, it's going to come back and hit my stop loss. But based on the experience, this has the highest probability of win ratios. So probably you should try out without using any other indicators. But if you feel you are used to a one particular way of trading with the same strategy, you can add volume, you can add RSI, but let me be very honest, the more indicators you add, the more confusion it will create. So if you understand the probability and the game of trading, that you have an equal opportunity of win and loss, and when you're accepting the risk of losing with your stop loss, then you are developing as a better trader and you're going to gain edge over other traders and start making money. Hope this video helped. Please do share, subscribe, like, comment, and I'll be more than happy to come up with more and more videos. Now we are pivot price action traders. I'm here to touch the pivots, take you in depth of pivot journey. I'm going to promise you will never be disappointed with the level of knowledge you're going to receive on pivots, both candle pivots and float pivots. Thank you guys. Have a great weekend.